Well, welcome back everyone from the Wall Street Silver community. We have an incredible guest with us today. Today we have Don Durrett. Don is an expert on gold and silver mining. Don is also has a goldenstockdata.com. You're the author and founder. Is that correct, Don?
Yes.
Nice, nice. We also have Lee Justo with us and Jim Lewis from the Wall Street Silver community. So we're going to get it right into the questions for you, Don. Who wants to start it off? Lee, Jim?
Sure, I could start it off. Why don't you tell us about your current outlook? There's an excellent article you wrote on Seeking Alpha that I would refer everyone to the forum to go follow, and we'll link it into the description as well so people can get it. So why don't you give us just a broad overview on how you see the silver and gold markets in the current state?
Okay. Before I do that, since this is the first time I've been on your Silversqueeze podcast, I just want to give a little background of how I got into this.
So, please, yes.
Perfect. So I'm a complete gold and silver bull. I started investing in gold in 1990, and that was all I wanted to invest in. I invested in gold stocks back then, and I didn't want anything to do with the stock market. I've always been a total gold bull, total silver bull. I got into silver in 2004. I was jogging with a friend, and I was telling him, "You need to start buying some gold stocks." And he said, "I'm more interested in silver." And I was like, "What?" I had invested in silver. This was 2004. So I decided to buy some silver stocks. Well, there was nothing out there on the market, no books that talked about how to invest in silver juniors. There was not one book on juniors, so I had to learn on my own. And so I ended up basically 100% of my investments from 1990 till about 2015 was gold and silver.
The 1990s were a painful time to be in gold and silver, at least portion.
People laughed at me. They literally laughed at me when I told them that's all I invested in.
I got involved in the late 1990s, and it was like only your grandfather would talk about gold or silver. I mean, no one had any interest. I mean, it was the era of the dot-com bubble. Everyone was chasing, rocket stocks. So I can appreciate that.
So I ended up, like I said, 100% focused gold and silver. So I've always been a total bug on this stuff. And I ended up, I'm a writer. So after I learned how to invest in juniors, I decided I have to write a book on how to invest in juniors. Nobody else has done it. So 2009, 2010, I published the first edition of my How to Invest in Gold and Silver with a focus on mine stock. So the chapter on juniors alone is, worth it. I mean, the chapter in junior is about 50 pages long, and I've redone that book. There's like 8 editions now, so every other year I update it. So like I said, it's like the Bible, really, if you want to learn how to invest in mine stocks. Then I created my website, Gold Stock Data, because there really wasn't a good source as an investor. I couldn't find a good source, so I created my own. So that's how I got into it. Then I started after I did the website. I had decided to take out a newsletter on my website for the subscribers. So I had to start analyzing the macro picture. But I had always analyzed macro all the way back to 1980. I basically have been focused on economics and politics. And so it came to me pretty quickly. I mean, writing the newsletter was pretty easily done. So now we get to the article that I just wrote. And the title of the article is "The Gold and Silver Bull Market is Not Over." And I go into why it's not over. And again, I've been following this silver closely since 2004, 16 years. I've basically been through this whole thing. And the last real kind of strong bull market was 2009 to 2012, 13. And this doesn't feel like that period. Coming out of MMT was just kicking into gear back then, which we didn't have this. The U.S. I'm going to shorten this up because we could go into this for a long time.
Oh, you can continue as far as you want.
We've talked.
No, this is great stuff.
No. This is all about you, Don. We want to hear your opinion. We got 40 minutes for you.
All right, so let's talk about. Get an overview of the silver market and kind of why I think this isn't a repeat of 2013. So if you look at how the U.S. economy has evolved in the 1990s, it was kind of, in my opinion, it was at its strength, its zenith, if you will. We had a very strong economy through the 90s because of the technology boom. But even during that technology boom, at that same time, you had the middle class at that time was still starting to struggle. That was the beginning of the struggle because Reagan brought in the globalism focus on economics, where we basically exported all of our jobs. And that was starting to bite a little bit in the 1990s. So by the time we got to the end of the 1990s, I think that the US was basically on a downhill kind of implosion type economy. Mm-hmm. Now we got to 2011 and 2001, and that's when the bull market kicked in. Right there, you have 1999, 2000, 2001. That is really a transition period. Even if 9/11 wouldn't have happened, I think we probably would have had a bull market in gold. But 9/11 hurt the economy a little bit, but that's when MMT kicked in and we started doing these infusions, these injections, stimulus to prevent the economy from crashing. That was the beginning of basically MMT. And then you got to 2008, and you remember 2008, that's when we had the last serious recession, and that's when you had, these really massive stimulus programs that went into effect on the federal level. That was the beginning, this one, the last one was 1.9 trillion. If you remember back then, it was like 600 billion, 800 billion. We didn't even talk about a trillion then because we weren't thinking in terms of MMT. It was just the beginning. But simultaneous to that, all of that spending, all that stimulus, if you will, that was, it was really not showing the actual strength and weaknesses of the economy because that money is basically printed money. And so it's basically considered government spending that's towards your GDP. And if you remove government spending from GDP, it doesn't look nearly as strong. So the whole world thinks, the U.S. has a strong economy, but in many respects, it's kind of an illusion because I think it's been a hollowing out, weakening of the economy. The American strength, the strength of the American economy has always been small business. But now we have, these titans, right? We have, the big five and the NASDAQ that basically, 20% of the whole thing of growth. But you don't have, I remember in the early 1990s, I had friends, I was just getting out of college. I had friends that were doing deals, if you will. Deal here, deal here. And when I talk about deals, basically investing money in businesses and making money. And it was hopping. There was stuff going on, right? Everybody was making money. But now, today, you can see how if you want to start a small business, it's not easy. And now we have COVID. Even without COVID, it would have been difficult. So my point is that I've followed this since 1980. And so going back to 2011, 2012, that last peak. So we started doing this injections into the economy. And the economy, it started to pick up a little bit, but we didn't have the growth. Everybody said, where's the recovery? Where's the green shoots, right? We didn't really have this strong, robust economy, but the stock market started trending up. And at that time, 2013, everybody said, well, we don't need to invest in gold. And gold is all about the fear trade. That's the number one factor by far is the fear trade. If you have negative rates, negative real rates, or if you have a strong dollar, a weak dollar, those only push the gold up on the margins. That doesn't push into a bull market. The only way you get a bull market is the fear trade. You have to have the big money. They basically they start to get nervous and they want to hedge their money. And that's what happened. 2013, silver, well, if I use gold, gold's probably an easier one to understand. Gold was at almost 2,000. It crashed all the way down to 1,200 in 18 months, 40% correction. So the bull market ended in 2013. In 2013, we went into a channel. The silver channel was a year later, started in 2014, and that channel lasted 6 years for gold, and it came out in 2019, and then 6 years for silver, and it came out in 2020 in July last year. So we had these two basings, and I'll get to gold because gold is very important. It's more important than people realize, I think. So you had this basing, if you will, for 6 years. Well, simultaneous to that basing, you had the hollowing out of the middle class. We have inflation that's starting to kick into gear because of MMT. We had the exception of MMT. Now, the only way, in my opinion, that silver and gold do not break out, and the next breakouts are about $28 silver, and you need to get to 30. You need to get over 30. So those are the two numbers, 28, 30. And then for gold, you need to get to 1950, 2000. The only way you don't get to either of those is if the U.S. economy comes back to life. So we're going to find out here in the end of the summer, July, August, September, those 3 months, I think are going to be the determining factors. We might even have to go all the way to October. But we're talking at the end of the third quarter, in the beginning of the fourth quarter of this year, we're going to find out if the economy is coming back and how strong it's going to come out. And that's when the fear trade should kick in. So I'm expecting silver to get to $30 mid to late summer, because I think it's going to kick into gear. And I'm expecting a 10% correction in the markets in either Q2, which you're in now, or Q3. A 10%.
You're talking about the equity markets when you say that,
yeah.
correct?
Okay. Yeah. So those things, once the equity market corrects, that's when I think the fear trade begins again. The last time we had a fear trade was in 2012. And it ended. It came off, and it kind of perked up in 2016, but it didn't get any leverage. And the reason it didn't is because MMT, they basically, the Fed basically pumped it and said, no, we're not going to allow a recession in 2016. And they're going to do the same thing this time, but we have inflation this time, so I just don't think they're going to succeed. Again, MMT could work. I mean, it could be, successful, and we push, and they kick the can down the road. And the stock market continues to trend, and silver gets stuck here and never gets over 30 for another 3 years. And
no, don't say that.
That's all a possibility. I'm always a realist on this. I've been doing this stuff for a long time. I look at the potentials, but the odds favor higher inflation. The odds favor the U.S. economy continuing to slip. Remember, this slip began in 1999, 2000. This slip has been going on for 20 years. So how much further can they kick this down the road? What can really generate to get the economy back on its feet again, right? I've been saying that really the last person, and I'm not political, I'm a writer. So when I write, I have to write on both sides. I don't vote. I basically never vote. I stay on the sidelines. I consider myself an historian writer. If I'm going to write, I have to be non-biased. I mean, I wrote a constitution. The only way that constitution is going to have any weight at all is if somebody non-biased wrote it. You can't be political on one side or the other, otherwise your voice doesn't matter. Isn't it interesting now, politically, if you're on one side or the other politically, you basically get judged. You get put in a box for being in that position, right? So I've always stayed on the sidelines for that. So, but I'm gonna bring up Biden. I'm gonna bring up Reagan. I bring up presidents all the time, but I'm non-political.
Could we just for 1 second, looking at the trend lines going back to 1971, like the ultimate down potential for silver I see would be like $10 to $11, and like the worst case scenario, just bouncing off the trend line that goes from 1971 lows. Yeah. And then gold, I mean, it could go down to 600 to 700, but there's another secondary trend line from 99 that brings it down to like the mid 1500s. Would you kind of agree with that assessment?
No, and interestingly, I think people will understand why I'm going to say no.
Okay.
It's because the U.S. economy is no longer as strong as it once was. China, recently they did a summit in Alaska, and the Chinese, and I really like that they came out and publicly said this because they believe it. They didn't say this for a political statement, they believe it. They said that the U.S. is no longer negotiating from a position of strength.
Wow.
You remember in the 1990s, China was just starting out.
Yep.
We were definitely negotiating from a position of strength in the year 2000. So 20 years later, the U.S. is no longer, and I believe that, I believe they believe it, we are no longer as strong as we once were. So from that standpoint, I believe that the U.S. stock market is basically not based on a solid foundation. So if you look at the $20 trillion valuation, I think it might even be 30 trillion now of the stock market, I believe that it's basically a lot of air. So from that standpoint, I think that the floor is higher in gold and silver for that reason. So I see the floor more like $14 silver.
Okay.
Because of that, because I think it'll get a bid. And I don't think you can just push it below that anymore. Now, last time in 2008, it pushed all the way down to $7, somewhere right around 7. So I just
great buying opportunity then.
Yeah, 14. And I was telling people, I was buying silver at $14, and I was telling everybody, you got to be crazy not to be buying physical silver at 14. And nobody would buy it. I used to bring 10-ounce bars of silver to work to show people, say, this is what I'm buying. You need to buy some of this. Let them hold it in their hand. And nobody bought it, not a single person. But that's when I was letting people know this is ridiculously cheap. So I think 14, I actually think that $18 silver for me was really kind of the free. If you buy silver under 18, it was like you're just sitting really pretty. That's what I used to always feel. Anything 14 to 18 is just an amazing buying opportunity. Now, as far as the bottom in gold, I think it's probably around 1,200. I don't think 7, 8 is possible. 12, and I think
how do you come up with that number?
I got you. Okay, a lot of people think 1250 is just way too low. And I think 1450 is really as far as we'll go. But I think I would put a bottom at 1250 as an outside possibility, right? 5 sigma move. I mean, something like that could happen. But a year ago, March 16th, gold went to 1450, right? That was a year ago, 1450. So there's no doubt in my mind that 1450 could get retested here. Okay. It could get retested in 2 ways. Number one is the stock market crashes, say 20%. I'm appalling for a 10% move, but if it crashed 20%, it wouldn't shock me that the gold and silver, because remember, they get sold off at the same time. But if you go back when it went down to 1450, it only stayed there for a week and then it started trending. Yeah. It's like it caught a bid. That's what I call it. And once it catches a bid and it starts trending, and that's what we saw. It went from 1450 to 2,075. And the bull market was back on, and now the bull market went off in August, and we're in correction mode once more. And so, do
you think we've reached a bottom here?
No, we haven't reached a bottom, and that's what I wrote in my letter. I mean, that article. I basically said, no, this is what we're at right now, 1680. We were at 1680 this week, and now we're over 17, a little over 1700. Today we're at 1730. So it's basically bounced about $50 this week. But and the reason why is it's starting to catch a bid whenever it gets beat up. But I think that the bottom will be put in when this correction happens. My target is 1550 to 1620. Okay. And I'm going to start buying miners when we have a 10% correction. I might not catch the whole thing. It might go all the way down to 20% down. But I think 10% down. I mean, the HUI is at 260. I'm hoping to be buying around 230, somewhere in there.
So are you predominantly in cash right now in your trading account? I mean, obviously you must be holding physical silver and gold.
Yeah. So yeah, I'm at 8% physical is my allocation.
Okay.
And I think that's enough. So I'm not buying any more physical. Once I got to 8%, I was like, I thought about going to 10%, and I'm like, I got enough. I have enough silver. I don't need any more. So I stopped at 8%. Same with crypto. I got to 3.6% and I stopped buying crypto. And so it's like, at a certain point, you just basically, that's enough. I got enough. Stop. And so, but with the miners, I continue. And again, most of the miners that I'm buying is miners that have big upside potential. Physical, if you buy physical at 30, it's really only a 2-bagger to go to 100. So you're not getting that big return. Right, if you're buying physical at 14, that's a different story. But buying physical at 30, and I'm talking about the premium, right? So anything under 18 physical, including the premium, I thought was really cheap, but I don't really see that. So I'm looking for miners with 5+ bagger potential. I'm basically just filling in. My portfolio, I've been building it for forever. So I'm just adding a little bit to it.
Don, give us your top 3 names. I mean, we're not going to focus on miners for this whole interview, but just can you quickly give us your top 3 names that you like in the exploration junior miner space?
Well, I really feel that the only way that you really get exposure, there's only 2 ways to invest. One is to be a trader, and so if you're a trader, you can basically get 20 to 30 stocks. And then if you're not a trader, then you want to get what I call exposure. And the only way, so you can get exposure for, your producers, your explorers, and your developers. And I think you need at least 50 stocks to get exposure. I'm kind of in the Eric Sprott mode. I like to own a lot of stocks. So I have about 150 stocks, but I have low cost basis. Like 0.5% of my cost basis or less in a lot of these exploration. I only have 8% in exploration, and I think that's a lot. And I have about, I think 17% in development. So only 25% in high risk, 75% in not so much risk. So I told you more about allocation than individual stocks, because individual stocks, I mean, three. I don't want any people going out there and just playing with 1, 2, or 3 stocks. If you're going to do
Okay,
that,
understood.
do
Understood.
the ETFs, and I'll tell you the ETFs that I like. So
Okay.
I like GDXJ. It's really it's really a mid tier. It's no longer a junior ETF, but I think it's pretty good. And then for the silver, there's 2. There's SIL, and then there's SILJ. I like kind of both of those 2. So if you're only going to play with 2, 3, 4, 5 stocks, I mean, those are the ones. But if you're just adding to your portfolio, you know, in many respects, I always say that nobody can pick. That's why I don't like to be a trader, because you can try to pick winners, but you don't know which one it's going to be, because there are so many factors. That's why I like to spread it around. I like Sprott spreads it around. You just don't know which one is going to hit home. Like in the silver mining, right now I have 59. I have a list of silver stocks on my newsletter. There's 59. So of all this, those are 59 silver names that I like.
Wow.
It's expanded. When I first did it, it was like 50, but I have to keep adding them because people let me know, wait a minute, Don, this stock deserves to be on your list. So I look at it. Yeah, okay, it does. I add it. So it's up to 59. So of the 59, I own about 45 of them. So there's 30, 40 good silver stocks out there, right?
Nice.
And you're going to get exposure. It's not easy, right? I mean, if you go buy 20, 25 silver stocks, you still left a lot on the table, right? I mean, it's tough. It's tough. I mean, drill stories alone, there's probably 10. You know, there's not a lot of producers, maybe 20. That's 35 right there. Then you got the development stories, another 10. So you just gotta, you know, it's tough. It's tough to really get a nice portfolio and cover the whole thing. But you can do the ETFs pretty well. The only time the ETFs don't make sense is if you want to invest, you know, like a lot of money. So if you're going to invest 250,000 or more, then wait a minute, I don't want to put all that in an ETF. I'm going to have to buy some miners. But if you're like 100,000 or less, you know, ETFs can make sense. And then I want to say something about physical. So we didn't talk really too much about physical. There's so much we could talk about. But yeah, PSLV has always been my favorite place to have a nice position, because I can trust Sprott. And the other thing that's nice about PSLV is you don't have to pay the high premium, right? You're paying 30% premium when you buy physical. When you buy Sprott, you don't. So even if the capital gains are a little higher for buying PSLV, so you're making it back without paying the premium. And you have that peace of mind. But then physical alone, I mean, that's one way. But physical alone, have it in your hand, I think is really the way to go. And people should start stacking. Now, buying at $30 silver isn't cheap. I mean, it's not fantastic entry because, again, you know, what is your upside? And we should talk about. I have this theory we should probably talk about how silver is actually risky once silver gets to $75. We should probably talk about that topic.
Please.
Well, you know, I've noticed that also, Don. When gold goes up historically, it sort of goes, it skyrockets, then finds a new higher plateau. But with silver, it'll do these huge spikes, then come all the way back to where it started.
Right.
You know, silver doesn't really give miners the opportunity to capture that cash flow long term,
right,
with silver prices at those elevated levels, whereas gold seems to find that higher plateau that allows the gold miners to, you know, capture some cash flow at the higher prices.
Right. And the reason for that is gold and silver they have something that's kind of diametrically opposed, if you will. So 80% of gold basically goes to investors and 80% of silver goes to fabricators, although that's shrunk. I mean, it was pretty much 80-20 from 2013 to 19, but now it's jumped immensely. But because, and then it shrinks back down. So since most of your silver is from fabricator, it acts like a base metal when you're not in a bull market. And so you get these crashes because it's like, whoa, so it'll act like money. It'll basically, that GSR, the gold silver ratio, will shrink, right? It shrunk all the way down to 40 in 2011. So it'll shrink and then it'll start expanding once it starts acting like a base metal. And when it starts acting like a base metal, then nobody wants the miners, nobody wants silver, and you know, you get these crashes. But the thing that makes silver interesting and the reason why I like it so much is because there's not enough of it.
Mm-hmm.
So even we have never had a shortage before, but I think it's coming. And I talk about this a lot. I wrote about it in the first edition of my book. And matter of fact, my first chapter in my book was silver because of how bullish I was on it back then, 2010. So what happens is this, is that you have 1 billion ounces of supply annually, about 900, somewhere around 900 million are mined, another 100 million in recycled. So you got 1 billion approximately. Last year was less because of COVID, but that's about the round good number, 1 billion ounces. Fabricators need at least 600 million ounces. And last year, investors wanted more than 40, that's 60%. And they'll take 80% if you give it to them. So they want somewhere between 60 and 80, and investors want somewhere between, say, 20 and 30 is the norm. But whenever you get a mania, or whenever you get basically the sharks smelling the blood in the water, investors can basically suck up all that inventory, which is what we're seeing right now. And so if you get over 40% for an extended period of time, you start to get this competition between the fabricators, the investors, and there's no inventory anywhere. So what's happening is everybody is ordering it 30 days in advance. And you'll see, we're seeing that right now, right? Mm-hmm. 30, 60 days in advance. So where are they ordering it from? They're ordering it from basically orders coming out of the ground. These are coming, the silver's coming out of the ground and is going to whoever ordered it. Wow. So what's going to happen is your investors are going to start basically ordering this stuff in advance as well. And so you're going to start this, you're going to start to see this shortages. And I think it's, and when the Silversqueeze all started, I said, it's early. You guys are just way ahead of the curve. You're just smelling it out. You know it's coming. But when the Silversqueeze really is going to work is when silver gets into the 30s. The reason why is because your retail crowd, I mean, you can just look at how many subscribers you have to your Reddit, right? You're not getting 500,000 people, and that's why. But the retail crowd that I'm talking about is in the millions of people, the millions, right? And those are the guys that can't buy gold, but they get afraid. So the fear trade kicks in, and the retail crowd goes, "I can't buy gold, I can't afford it, but I can buy, $1,000 worth of silver, or $500 worth of silver, no problem." And so once you get into the 30s, the retail crowd kicks in. And believe it or not, and we learned this back in 2011, the retail crowd didn't really go nuts until silver got in the 40s. They started getting excited when silver got to 40.
No one wants it at 10, but everyone wants it at 40, huh?
Yeah. So what's going to happen is that this time, I really believe, if you look at the technical chart from 30 to 50, there's only one pause, which is 35. So once you get over 30, there's a magnet that's going to pull silver to 35. And then once it gets to 35, it's going to go, oh my God, there's no support till 50. So how long is 35 going to last, right? It's not going to, it might last a month and that's about it. It might last a week. So we're going to run from 30 to 50, I think in 3 months is my expectation. And then this time, I don't think it stops at 30 because of M&T, because of inflation. So I think it's going to overshoot. It'll probably get into the 60s. And then we're going to find out what the bottom is. And once it gets into the 60s, that's when your shortages are going to kick in. And so this time, you're not going to get a crash because the shortage situation is going to be in place this time. Last time, silver went to 49 and stayed there for a day, I think. It went to 40. It was back to 45 in just a couple of days, and then it was under 40 in a week. So that's not going to happen this time. This time, we're going to go over 50, stay over 50. And it's going to be a whole new world, if you will. That's my expectation. Now, again, it might not happen. It's all based on this theory of mine that we're going to have shortages. We don't have shortages. Maybe it goes back to a base metal. It's just a theory. Now, I wanted to talk about the reason why I think that silver has a lot of risk once you get to $75, $100. And that risk is that once you have shortages, all of the big manufacturing companies in the world are going to start screaming, I can't find any silver. I need help here. Help, help, help. Once they start screaming for help, in my opinion, I don't know how long it's going to take, but palladium never got help. Palladium never was designated as a strategic metal. You can buy, retail can buy palladium. What I'm saying is that they will empty the ETFs. They'll basically, it's 1 billion ounces of silver. They're basically, ETFs are illegal. We're going to empty them out. Wow. Once they empty them out, it's 1 billion ounces. So you dump 1 billion ounces onto the market. That'll push silver under 50. So if you're anywhere around $75, and you own stocks, you can wake up the next day and everything could be no trading, no trading, no trading. And then when it resumes trading, it's down 25%. That's a very real possibility.
You think the Canadian government would go in and just grab everything in Sprott, or
no? They would sell everything back to their customers. But what would happen? They would end up they would sell it back, and then all that physical would go to the wholesalers. So what they do is they would make it illegal for retailers to buy ETFs or to buy bars over a certain size. It could be 100 ounces or bigger. It could be 10 ounces or bigger. It could be 5 ounces. I think coins will be fine. They won't do anything to coins, just the bars. They might only do 1,000. They might start with 1,000 ounce bars and say, basically, you can't buy 1,000 ounce bars retail. But I think they're going to do 100 bars. So they're going to basically say, you can sell them, but you can't buy them. So you won't be able to buy 100 ounce, 1,000 ounce bars anymore once they call it a strategic.
If that happened, don't you think some sort of, number one, that would be so, price fixing never works. It basically, the market almost wants to do the exact opposite of what the government or the regulators are trying to push on people.
Right.
Wouldn't that be such a huge signal to the market that, oh my God, there's something really wrong in the supply side of silver? And what in some countries where obviously not every country is going to follow suit with that type of regulatory strategy.
Right.
In countries that aren't playing ball, don't you think the silver price would just skyrocket? I mean, what, China or Singapore or Dubai? Well, they're not going to play ball with that type of regulatory scheme. Australia, I mean, I don't know. I'm just speculating.
No, that's the one pushback that I've received more than any is the black market will basically kick into gear and push the silver price even higher, or it won't let the price go down. That's a possibility, but it'll take a while for that to occur, because if you dump 1 billion ounces onto the market, the price is going to go down. So then the black market could kick into gear and push it higher. That is a possibility, but it does not ignore the fact that if the manufacturers scream loud enough and they basically decide, let's make it a strategic metal and we're going to stop the purchase of $1,000 retail, I do think the price will crash initially. Then we'll see if the black market can pick it back up. Now, when does this possibility happen? I think it doesn't happen until at least $75 silver. I think the regulators will just ignore it until you get really high prices. So it might be, we might get 125, 150 before they even do anything. But I think the G7 for me is the key. And I think that I think Mexico would have to play ball because they're like the biggest producer. They'd have to do something to help out, if you will. But Australia, Canada, US, Europe, China, and Japan, I think they all basically play ball and do this to make sure that there's silver availability. Isn't
it in Mexico's interest to allow prices to go higher so they collect higher royalty rates from the miners? Why would Mexico care?
Yeah, right, exactly. So there would have to be pressure put on them. But I think it's going to be interesting to see what Mexico does, because Mexico could literally be the black market.
And Peru's pretty much becoming a big supplier, isn't it?
Yeah, they could be the black market, and it's going to be tricky. It's going to be messy. I don't know what's going to happen, but I'm very bullish to $75, $100 silver. Very, very bullish. I mean, people have been giving me a bad time. We've been in this channel from 2013 to 2019, and silver's never going to go higher, right? We went through this long period, this long correction. Everybody's, and when I'd write articles, $100 silver, everybody would laugh, You're not going to $100 silver. You out of your mind? But now, trust me, once we get to $40, $50 silver, which I think is going to happen, I don't see anything that's going to stop the momentum from pushing it to 75 and higher. It's going to be really tough. But again, shortages are going to have a big play in this. And we're already seeing shortages at $25 silver. Retail crowd hasn't even jumped in yet, and we're seeing shortages. And that's what, there's not enough. That's my point.
Well, here's the thing. We noticed in 2016, 2015, that seemed to be the mining peak at 900 million ounces. That's when And ever since 2015, 2016, that 900 million ounce peak, the miners' global production has declined 2 or 3% per year, to the point where last year we were just a tad bit under 800 million ounces globally produced. And then there's recycling that adds some back into it. But if that trend stays in place, that gradual global miner production keeps declining at that 2 or 3%, you sort of I ran this graph on a spreadsheet, and once you get to about the 2026 to 2030 time frame, we're only pulling out of the ground 650 to 700 million ounces if you go out about 5 or 6 years. And industrial demand, the manufacturers, they're right around 500 million. And if these green technologies take off, you could easily see their demand climbing up to 600, 700 million ounces. So I'm thinking in that late 2020s, 2026 to 2030 time frame, we might reach a period of time where industrial demand for silver is above global miner supply. And then, all right, where's this deficit? Who's not getting the silver each year then? And that's not even counting what we produce in bars and coins for the mints that they want 200 or 300 million ounces this year. Someone's not going to get their silver in about 5 or 6 years, is my prediction.
Well, you're reinforcing my theory. There's not enough silver, so the governments have to do something. And I think calling it a strategic metal is really their only option.
I have to say this whole scenario reminds me of what happened with Jesse Livermore and coffee. If you've ever read Reminiscence of a Stock Operator, I recommend that book highly. But it's very similar scenario, so it's not without precedent.
Right. Interesting. Yeah, it's not going to be enough, so it's got to go higher. Right.
Well, there's also the argument when Warren Buffett had his 100 million ounce stash back in the late 90s. Everyone was saying, "Oh, well, he's cornering the market again, just like the Hunt brothers." But then we quickly found out there's a lot of silver on the sidelines in India and certain other countries where families just store it. It's just cultural. There are hundreds of millions of physical ounces just stuffed in people's closets and in private storage. And at some point, supposedly I've seen one study where that's probably the largest holder of silver is private family storage. And it's at some price, and maybe that's 50, maybe that's your 75. If there's enough economic dislocation and enough poverty out there where people are just not able to make ends meet, a lot of that silver comes off the sidelines and gets liquidated back into currency, fiat, so people could just pay their bills. And I don't know what price that is. No one can know that, but there's a huge amount, several years worth of miner production that's just stuffed into closets right now that is coming off the sidelines at some point.
Right. There's kind of two ways to look at kind of silver investment. One is kind of a physical long-term view where you don't really care about what's going to happen in the short term, like the next 2-3 years. And what you're talking about, 2026, the end of the decade. And that's a good kind of a way to do it. It basically just buy and hold and don't even worry about the price in the near term. And then you have your basically your mining investor who wants a return, and they're always looking for a kind of a cycle, catch the cycle. And I'm more in that category, if you will. I've always thought of gold and silver as very cyclical. The whole thing about shortages and all that long term, that's out there, and I like it. It gets me excited, and I think it plays into the cyclical a little bit. But the real focus for me is really kind of nailing the cycle. So I think that this is a once in a lifetime thing that's happening right now. So what started in 2000, I don't think is over yet. So yeah, we did have this bull market 2009, 2013, but the first bull market was 2001 to 2008. It was 7 years long. Then we had a correction and the bull market ended. So from 2008 to 2009, and it was more than 12 months, we had a correction. Bull market ended. Then it resumed 2009, 2013. So we've had two bull markets. One was 7 years, the other was 4 years. Now we're in a new one. We just started another one, right? And the summer, last summer in July, we went over 1850. In my opinion, that was the beginning of the bull market. I don't think it's going to last less than 3 years. So we're looking at, and in my opinion, a bull market in silver anywhere from 3 to 7 years is my feeling. We're already 6 months into it, so 2.5 years to 5 to 7. So, but the cycle. So we're basically trading this cycle. That's the way I look at it. And so it's like, okay, and I'm hoping this is the once in a lifetime thing, and silver goes all the way to 100, 150. If it does, the miners are leveraged to the hilt. I mean,
a lot of these miners that have projects coming online in the next 3 or 4 years, I mean, this could be perfect timing for some of these juniors or near-term producers.
Yes.
That they're coming in with projects where it costs $14, $15 to produce, and they're coming online right when silver's skyrocketing and coming into these shortage type of scenarios. And that's why everyone just feels like that's the place to be, is these junior silver producers.
Yeah. That's why I wanted to bring that up, is the leverage is just unbelievable. And exploration stocks, you got to be a little careful, because even if the price of silver starts trending, they're not going up unless their drill results are good. Mm-hmm. So you got to be careful on your drill stories and basically watch and make sure that they're trending, that they're not, 2 quarters in a row of bad drill results, and these stocks can go down 30%. It doesn't take much. They're very volatile. So you got to be careful on your drill stories. It's the development stories and the producers that are really going to run with higher silver prices. And the developers, it's all about having a path to production. If they have a path to production, they'll run. Especially if they have a path to production within 3 years, they'll run with the silver price as well. And they'll even outperform the producers, because they're not valued as high. So they're probably their valuations, they're not, like, for instance, once you get the first pour, you get revalued, if you will, and you get like maybe a 5x or even a 10x multiple. So until you get the first pour, you're not going to get that valuation. So the developers and the producers, I like producers, I'm more producer heavy. But wow, I mean, if we get to $75, even $50 silver,
I'll be excited.
Silver miners are just going to be front page news. It's this historic stuff we're looking at here.
Wall Street Silver will be the place to be for talking about all this stuff.
Yeah, and it could happen this year. All we have to do is get over $30 silver. That's the number. We got to get over that number, and once we do, and so we got to be watching for interest rates, the 10-year bond, unemployment, all these macro numbers, because again, it's all about economics. Economics kills gold and silver. Strong economies, believe it or not, are just awful for gold and silver. You got to have a weak economy. It's the only way you're going to get these runs.
I was going to ask you, is there any scenario where you see gold and silver just going straight up, even with a correction in the markets?
If we get a correction, then they go straight up, because that's when your risk off trade kicks in.
I'm saying without having that pullback that you talked about.
You don't know. And this is where, I do consulting for Larry Lepard, and we basically are not on the same page with this. It's kind of interesting. We talk every week. So he thinks it's possible that gold and silver are basically hitting a bottom here and going to start trending, regardless of what the stock market does. The stock market goes higher, gold and silver are going to go even higher. It's like, he's of the belief that gold and silver are just it's too low, and he's right. It is. Gold and silver are too low. Mm-hmm. They both should be a lot higher, and he thinks they get a bid any day now and start trending. But me, I'm not in that camp. I'm more of the only way, and this is my point to him, is I say, where's the money going to come from? Because the only thing that's going to push gold and silver higher, and again, gold has to lead. I really believe that gold has to lead. Without gold going to 2,000. Silver's not going to 30. That's my personal belief. So what pushes gold to 2,000? It has to be a lot of money. It has to be the big money, right? And the big money is not going to jump out of the stocks, jump out of bonds. Well, they could jump out of bonds if interest rates go higher. I mean, that's the one scenario. and jump out of bonds and buy gold, and then gold starts trending. That is the one scenario I see that could happen.
Okay.
But I don't see it. I could be wrong about that. He could be right. Gold could just start flying right now, and without a correction.
Well, we actually hope you're wrong.
Yeah, I want him to be right. Because I don't want to, get this big sell-off in gold and silver and the miners before it hits a bottom. I mean, that's never fun. I never like experiencing that.
I've been meaning to get Lawrence on here. I follow him on Twitter, and I do need to get him on here.
Well, he had 100,000 views on Daniela's last week, so he's a good interview.
Well, we don't have that many subscribers, but one of these days we'll get 100,000 views.
Yeah, so he does a lot of podcasts, and so I definitely recommend him. And you can talk to him about this. Absolutely.
Beautiful.
Yeah. Larry's been doing this for a long time, just like me.
Yeah, he has really good results in his fund too. So.
Oh, unbelievable! 100% the last 2 years.
Yeah.
Wow.
So I get a tiny bit of credit for it since I consult for him.
Well, Don, we've really enjoyed having you on. Let's do this again in the future. In about the next 2 or 3 months, we'll have you on again, and we'll just discuss the market as it develops. And let's make this a regular thing. This has been a great conversation.
Yes.
Right. So put in your notebook. As far as you probably have a guest, possible guest or whatever. Put it in me and put a little line next to it and say, call Don when the Dow is down under 30,000.
Okay.
When the Dow drops under 30,000, which would be a 10% drop from here, I'd love to be back. And then we can talk about, at that point in time, gold and silver will be taking a bath, and we'll be able to talk about where it's going from here.
Okay. Well, you and I chat on Twitter privately. So you remind me when you're ready to come back on. Okay.
Will do. And I think that could happen in the next 2 months. And you said 2 months. 2 months is a good time frame.
Mm-hmm.
Yeah.
I think April, May is a good scenario for that to happen. Although it's possible, the markets tend to like to kind of go on pause, if you will. So if you remember right before the election, the Biden election, everything just kind of stopped waiting for who won the election. And then after Biden won in November, everything kind of stopped because they wanted to wait and see, how does the market going to react to Biden? What's going to happen? What's his budget going to be? So everything kind of froze all the way till like January, February. And he never did a State of the Union. So the market's still kind of pausing, and it still doesn't really know how to react yet. So now we're finally in April. And so the market's digesting its expectations of Biden, and we're going to see. So if the market, if we don't crash in April, we might have to wait all the way until the end of summer. Because the reason why I say that is because the economy is not really going to get back on its feet. People aren't going to go back to work until the end of summer. So the markets could say, oh, let's just wait and see if the market's going to, if we're going to get back on our feet. But the market tends to be ahead of itself, 6 months ahead of itself. That's the reason why I think April, May is when we get this correction. And I think that if you get a 3% correction, I think people are going to get really nervous and they're going to sell, and it's going to be hard to stop it. When does the Fed jump in here? So it's going to be the next couple of months, the next 3 months are going to be interesting. We haven't had a correction since October. So it's been a while. If you look at the S&P 500, I mean, it pretty much went straight up since mid-October, somewhere in there.
It's over 4,000 now. No.
Yeah, it's pretty crazy.
And the NASDAQ 100 just popped up too. I mean, so. Yeah,
it's like at what point do we get a correction, and then how does the market correct? So it's going to be interesting. Economics and gold, and silver go hand in hand. They're not, you can't separate them. That's for sure.
Thank you so much for joining us. This has been a great video.
You. Yeah, I've been looking forward to it. We've been talking about it for a while now. So.
We appreciate you so much, Don. Thank you so much, everyone from the Wall Street Silver community.
Yeah, and anybody that wants to invest anybody that owns gold and silver miners, if you own them, check out Gold Stock Data, because it's a fantastic place to basically add more stocks or just to monitor your portfolio. That's what I do. I mean, if I didn't have anything else, I mean, just the monitoring alone is worth the price.
And we put it in the description too, so everyone can see it.
We'll include, the link will be in the description.
All right.
Awesome. Thank you so much, everyone, for joining us. We'll talk to you soon.